people aren't able to buy a house because this guy is a numbskull. He keeps the rates too high, and probably doing it for political reasons. The only time I remember him cutting rates, I mean, he cut the rates just before the election to try and help Kamala or whoever he was trying to help. He probably didn't know.
President Trump backing off threats to oust Federal Reserve Chief Jay Powell before his term is up next May. But the Truth Social attacks keep on a-coming. Writing this, the president did, quote, "Housing in our country is lagging because Powell won't lower rates. Families are being hurt because rates are too high. And with new numbers showing the housing market indeed is in a slump. It's in a lockup, if you will. President Trump might try to end the capital gains tax on home sales." Larry Kudlow, home sales existing, slipping, prices are at a record high. I will note that $500,000 in capital gains realized are already tax exempt on a primary home sale.
And correct me if I mean, I happen to agree with him on this. I've never met a tax cut that I didn't like. But if you sell your home and reinvest it in another home, that's not a taxable event. Now,
well,
there may be ceilings on that.
Yeah, there's ceilings. 250 for an individual, 500 for a marriage.
So waive
and those were set in 1997, by the way. They haven't changed since 1997.
So you could index it, or you could just waive it. I mean, if you could get it through, I'm in favor. You know, but the other point that Trump makes, existing home sales are less than 4 million. That's a pathetic number.
Right.
And that came out this morning. And again, it declined by 3%. The National Association of Realtors said that we are stuck. High mortgage rates are causing home sales to remain stuck at cyclical lows, i.e. recessionary lows. 3.750 million. We should be like 6.5 to 7 million. Okay, that's where we should be. That's where we were during Trump's first term. And they blame interest rates. They blame mortgage rates, which are not as high as they were in the 80s, but they're still running about, what, 7% or less.
I mean, but honestly, doesn't this talk of a 3% cut? I mean, that is bonkers. Let's just kind of put it out there. That would be the biggest cut in Fed history. And it would also put the federal funds rate below the rate of inflation, would it not? I mean, inflation is still running north of 2%, the Fed's target. So Trump is talking about wanting to cut rates to 1%, would be below the rate of inflation, and spur on even more of an inflation that he's worked so hard to try to
Well, he has a very futuristic view of the interest rate. I'll grant you that, Jonathan. You know, Mohammed Al-Arian, who called for Powell to resign the other day, he thinks, and I use him, he's kind of a Keynesian guy, but he's a smart guy, middle of the road, you know, a traditional elite type guy. So he wants Powell to resign, but he also said, you won't get anything in July, but you'll get a 50 basis point jumbo cut in September, almost like last year. And I think, to your point, I think you're right. But if the inflation rate is holding, I don't know, at 2% the last 5 or 6 months, so if you put the Fed funds rate a point higher, a so-called real rate, you know, that would get you about 3.5. Currently, we're 4.5. So, and I think that's where we're going. But, you know, Powell's late, whatever his motives are. These stupid Fed economists, they don't need tariffs. Again, we go back to the beginning of the show. They're all petrified of tariffs. They don't have any models. None of the horror shows panned out. But they, you know,
they're data dependent, Larry.
Yeah,
Where's the data?
That's right.
Larry's not buying that.
And they send Powell out as their mouthpiece, and he garbles on and blathers on about stuff that's not even happening.
Right.
Yeah. I don't think, you know, back to the interest rate thing, I don't think interest rates are by any means a total panacea for the market. Because I actually am persuaded by the fact that artificially low interest rates for a long time propped up housing prices too much and made them unaffordable. But I do think we're in a very weird spot because of the Fed, where we had a huge batch of low mortgages and then zoom up to 7%, which is not historically high, but compared to 3, it's big. And it's created this weird historical moment where you've got very different opposite poles of mortgage rates. So what I'm saying is I do think some kind of rate cut might help break that logjam. Not going to solve everything.
The psychology.
I
But
agree.
on the margin, it's going to get a few more sellers into the market. It's going to get more buyers. Buyers aren't waiting for 3%. They're waiting for 6%. They at 6%, you'll get millions of buyers who will get into this market, and I think that could make a
You
difference.
need more inventory.
You do need more. You do
at
need more,
lower
yes.
prices, because a lower mortgage rate only causes the seller to demand a higher price. And you quoted those realtors, and I say that with disdain. They should tell their customers who have houses on the market to lower their prices.
Well, prices actually, median price has dropped down. Let's see, 2.6%.
It's at a record.
2.6%.
No, it's at a record high.
But the percentage change has dropped way down. It's only call it 2.5%. A year ago it was 4%. A year before that it was probably about 10%. But there's another way to look at this, away from interest rates. You had a long period, 4 years.
No, it's up 2% from a year earlier. The national median existing home
That's
price
what I
is
said.
up.
That's what I
That's a
said.
record high.
2.5, yeah, but the percentage change has come down. You're getting relief from the last year and the year before.
No, it's up.
It's not. I know it's up, but it's only up 2.5%.
The rate is decreasing.
The,
is what he's
the
saying,
rise
but
in
it
the
is
rate
still up.
is slowing
Oh,
down. I'm
okay.
not saying housing price. Okay,
I got you.
through that. Here's the point I want to make. You have 4 years where prices rose faster than wages. So real incomes, take-home pay, real incomes have been falling. You got to straighten that out. Now, in the last couple months, real incomes are beginning to rise again as inflation comes down. What you need here is an economic boom where incomes go up and up faster than prices. All right? So real disposable income, or what you would call take-home pay, Reagan used to call it, it's income adjusted for inflation, needs to go up. And when that happens, income has a very powerful effect on the housing market. When that happens, you'll see a much stronger housing market. That will supplement, by the way, some kind of interest rates are going to come down. Okay, I don't know how far they're going to come down. Long rates in particular. I tend to agree with you. The psychology of a 6% mortgage, I like that a lot. But real incomes have to go up. They're just now beginning to go up.
Yeah, I mean, it's all about the data. The two pieces that worry me are the rising metal prices and the rising 30-year bond.
Where's the 30-year, Jonathan?
4.9 something.
Almost 5. Lower your home prices.